Now, if you went to Indiana University back in the day, you all know Juan Powell, and you may not even know that's his name because he went by DJ Whip. This man DJ'd all the biggest parties at Indiana University back in the day when I was there. So I got to give a huge shout out to DJ Whip for my youth. And let me give this shout out to Carl West. Carl West gets a shout out. One of my frat brothers from Indiana University, the Alpha Chapter of Kappa Alpha Psi Fraternity Incorporated. So Carl West is celebrating his birthday coming up. And I don't think he minds me telling you, but Carl's turning 50. So the big 5-0, the half a century. Hey, man, salute to you. Happy birthday, Carl West. And Twyla Smith. I got to give her a shout out as well. She's celebrating a birthday coming up this week. So happy birthday to everybody out there, all those April babies, the Aries. Happy birthday to each and every one of you guys. Okay, so you should have had some time now to go ahead and start answering all those questions. You probably got it down already. Let's get with the question of the day, and then we're going to answer these questions and get out of here. Because I got some partying to do. I got some celebrating to do. So I'm probably going to be here next week. Most likely, I'll be here next week, but I plan on partying all week for my birthday. So I can't give you any guarantees to that, you guys. So question of the day. Let's do this. Now, I couldn't find the question or who sent it to me, on what platform it was. I could not find it to save my life. I've been looking for it for 2 days. Whoever sent me this question. So I don't have your name to give you the shout out, to welcome you to the family. You know who you are. And if you hear this, go ahead and shoot me another email. Send me an email, 800@creditscoreman.com, so I can go ahead and give you the proper shout out and welcome you to the 800 Credit Score Man Show family. All right, here's the question. Can an authorized user close the card? So that was the question, or something like that, because I couldn't find it exactly, but I remember and I wrote it down. I just didn't write their name down. So can an authorized user close the card? So here is your answer. No, an authorized user cannot close the card or get a limit increase or anything of that nature when it comes to that credit card. Only the original holder of the card can close it and things of that nature. Ask for increase in the limit and whatnot. Now, the authorized user can make payments to the card. If they want to, they can make payments to the card they owe on the card or whatever your agreement is with that person, and you're the authorized user. You can make payments on that card, and you can remove yourself from the card. The original holder of the card can also remove you, but you can remove yourself from the card as well. And you definitely want to get rid of, remove yourself from the card if it doesn't have the positive attributes that you needed it to have. You want to go ahead and remove yourself from it. I mean, for example, if they start missing payments, they miss a payment. One of the questions in the quiz is, how many points are you going to lose? So start missing payments. If they're going to, say, file bankruptcy or something of that nature, you want to get off that card prior to it happening. So whoever's card you're on, hopefully you guys are close enough, tight enough for them to let you know, give you a heads up that, hey, I'm going to be having an issue. I'm not going to be able to make the payment. Or I don't know if they would do this, but even if they were to charge a whole lot on the card, or just let's just say they were going to charge their vacation on the card, they might pay it off in a couple of months or whatever, but that's some information you need to know because it's going to impact your credit utilization, right? If they start using a lot of the card. So just so you know, the authorized user, they can't close the card, they can't increase the limit, anything of that nature. But if you are the person that's on that particular card as an authorized user, you want to make sure that you get off that card if things start to go south, if you will, when it comes to that. You want to definitely jump ship if that's the case when it comes to authorized user, because the whole point of you being on it, unless it was just so you can use it yourself for an emergency or just use it regularly, was to help you with your credit score. So if it's no longer doing that for you, then you definitely want to go ahead and get off that card so it doesn't negatively impact your credit score. All right. So from whoever sent me this question, I truly appreciate it. You all can send me questions. You can hit me at 800@creditscoreman.com. Or you can go ahead, you can inbox me on Facebook at 800 Credit Score Man. You can contact me on Instagram, same thing, 800 Credit Score Man. Or even on Twitter. You can do that as well at Credit man on Twitter. So you can hit me at any one of those places, and I apologize, I just couldn't find it. I couldn't find it anywhere. So thank you very much for contacting me. I'm pretty sure with the little back and forth that we had that I answered your question for sure. But if I did not, hopefully the show actually answered the question the way you need it and could understand it. So thank you very much. You guys check me out. Follow me on one of those things. And again, if you have not gotten the ebook, go out and get 5 Pillars of Credit. Spend that $3, you guys. Okay, so let's go back to number 1. Got all the shout outs out. Let's go back and let's answer these questions. I know you're ready by now. All right. So number 1 was, what are the 5 pillars of credit? So the 5 pillars of credit are this. Number 1 is payment history, per the book. Number 1 is payment history. Number 2 is credit utilization. Number 3 is length of history. Number 4, and you know I have an issue with that wording of length of history as well, especially if you read the ebook. Number 4 is mix. What's the mix? Number 5 is inquiries. Those are your 5 pillars of credit. Those are the 5 things that you must know about and that you must do to get a good credit score. Those 5 things. So those are the 5 pillars of credit. That's the answer to number 1. Number 2, per the book, which pillar should be eliminated? Now, I've ranted and raved about this several times, not so much on the show, I don't think, but definitely live when I'm speaking. I do rant and rave about this one because it really gets under my skin. But per the book, I put it in the book, and so the one that I think should be eliminated is inquiries. I don't think that particular pillar should cost you points just because you're looking for credit. Just because you're looking for credit, I don't think that should actually cost you points, and there's nothing positive about it. You can't do anything to that particular one to help you with your score. All you can do is stay away from it, basically. So that's all you can do. So stop, trying to get credit places. That's the only thing that you can do when it comes to these inquiries. So this is the one that I think need to be eliminated, and I think the credit bureaus will be better served by doing something else. And yes, I do have my ideas on what they could do, what they could add or replace this particular pillar with. I do have that. So if TransUnion, Equifax, Experian, FICO, Vantage Score, any of you guys out there listening, I would gladly sit down with you and give you my opinion on what I think should be changed in this to help you evaluate risk of the people that are trying to get credit. All right, so number three is, so number 2, the answer was inquiries, right? Number 3, how many points do you lose for a soft inquiry? How many points do you lose? So if you didn't pay attention closely to what I was saying in the question, then you probably said anywhere from 2 to 10 points. You might have even said, experience says that you can lose 5 or 10 points for each inquiry if you've been listening to the show, reading the book, and all that stuff. But I asked about a soft inquiry, and a soft inquiry doesn't hurt your credit at all. It's a soft one. It's not one where you were out seeking credit. You weren't asking XYZ Bank to give you a credit card. You weren't asking ABC Bank to finance your home or finance your car, or you weren't trying to get a student loan. So this particular inquiry is a soft one, which could come from a potential employer, or maybe if your insurance company is looking at your credit, but you're not asking them for anything. You're just trying to get car insurance or get a car insurance quote or a homeowner's insurance quote. So those are soft inquiries, and they do not hurt your credit at all, not one iota. So I'm gonna call that the trick question of the quiz this time. So you don't lose any points when it comes to soft inquiries. From hard inquiries, you're going to lose anywhere between 2 and 10 points when it comes to your hard inquiries. Question number 4, credit utilization is what percentage of your credit score calculation? So credit utilization is the second highest. It has the second most weighting of the 5 pillars, and that's 30%. So that's 30%. Credit utilization is 30% of your credit score calculation. Question number 4, which really goes hand in hand, describe credit's 30-30 rule. So I call this the credit 30-30 rule, and here's why. Because of question number 4, which says that your credit utilization is 30% of your credit score. So that's the first 30 of credit's 30-30 rule. And the second 30 of credit's 30-30 rule is the fact that they being the credit bureaus, like and give you more points when your credit utilization is at 30% or less. So that's the second 30 of credit's 30-30 rule. The first 30 is the fact that your credit utilization itself is 30% of your credit score, and coincidentally, or maybe by no coincidence at all, that the credit bureaus like you to have a credit utilization of 30% or less. That's when you start to get additional points. You're at 50, you're at 60, you're at 70% credit utilization, and you make a debt reduction plan and you start getting those credit cards. This is only dealing with your revolving debt, which are, your credit cards. If you start to get those down, when you hit the 30% threshold, if you will, you'll start to see your credit score go up. So that's credit's 30-30 rule in a nutshell. I would love to know how many people that got that one right. So hit me, say yes, I got it right, or whatever it is. Nope, I got it wrong. I was partially right, whatever it is. 800@creditscoreman.com, or even text me. Text me if that's easier for you. 312-600-5855. Text me and say, yep, I got it right, Mr. Credit Score Man. All right. Number 6, according to the book, what was my credit score when I started out? So in the book, and every time I speak, and I've said it on the show when I've told my story, what was my credit score when I started out? And that was 585. That was my credit score when I started out, 585. So here's just something I'm just throwing in there. If you've got a 585, then what category are you in? Are you in bad, poor, fair, good, or excellent? 585, you are in bad credit. Anything under 600, you are dealing with bad credit, all right? So there you go, a little bonus in there. How many types of credit do you need? How many types of credit do you need? So this is question number 7. How many types of credit do you need? And this is dealing with your mix, which is one of the 5 pillars of credit. So this is dealing with your mix. How many types of credit do you need? You need 2 types. There are 2 main types, right? There's 2 main types, revolving and installment. Those are the 2 main types of credit. So your revolving, like I just mentioned, are your credit cards. Maybe even you have a home equity line of credit. Those are your revolving debts. Then you have installment loans, which would be like your vehicle, your mortgage, your student loan, something that has a term. If you're looking at a mortgage, maybe you finance it on 15 years or you finance it on 30 years. That's the term. That's what it's called. That's the term. And then it usually has a fixed payment. Sometimes they don't. If you've got some, funky kind of loan or whatever, you have a variable rate loan, your payment could go up and down. Even if you have a fixed amount and is dealing with your mortgage, it can go up and down because it's not just your mortgage that's in your payment if you use what's called escrow, and that means you put your taxes and your insurance in it. So if your taxes go up where you are, your property taxes that is, if they go up where you are, or if your insurance goes up or if it goes down, that can reflect in your payment as well. But generally speaking, typically, if you're talking about it, that is your installment debt. So you need 2 types, right? You need 2 types, and the 2 types are revolving and installment. Those are the 2 types. That's your mix. Then number 8 is, what are they? So I already answered that, right? Revolving and installment. Those are the 2 kinds. That was question number 8. Question number 9. What's the range of points you can lose if you have a late payment? What's the range of points you can lose if you have a late payment on your credit report? 30 to 100 points. 30 to 100 points. You can lose 30 points for being late. You can lose all the way up to 100 points for being late. And yes, just one time you can lose that many points. Now, this is just generally speaking, because you can lose just 20 points. I mean, it's possible. You can just lose 20 points. Maybe you lose 103 points or something one time. But generally speaking, on average, you're going to lose anywhere between 30 and 100 points for having a late payment. I was just inboxing. I don't know if I was inboxing or if I was emailing someone just recently, and they had a late payment on their credit report, and their credit score dropped 20 points. So, it's not a hard and fast rule that you're absolutely going to get 30. Some of this, and if you listen before, I said depends on how what your credit score is. So unfortunately, people with better credit scores, if they